Good morning, everyone. My name is Michael Naidrich, co-CEO of AmeriVet Security. As always, I am joined by my partner, CFA, all things rates, liquidity, and Fed, Gregory Faranello. Hey, Greg, good to see you again, bud. Hope you had a nice weekend.
Good morning, Michael.
So let's jump right into it, bud, like we like to do here. One of the things you and I have spoken about pretty much for the last 2 years is about how Chairman Powell has been very transparent and really telegraphed the moves that were coming or non-moves. And there seems to be a pretty big debate here on 25 versus 50. Elizabeth Warren this morning was calling for 75, and I know some of the folks that you follow closely that you think does some messaging for the Fed is pointing towards 50. So with that drop back, I'll take a step back and let you handle the next few minutes here, bud.
Yeah, no, I appreciate that. Yeah, look, it's interesting. I think at this point, I'm more curious, not even about 25 versus 50, but whether Chair Powell leaves it that way heading into the meeting, right? So do we not have forward guidance moving forward? Because it's really been a long time. Even when the Fed was hiking and they wanted 75, they signaled pretty definitively. We would have heard that this morning. I think we got some anecdotal evidence over the weekend. Greg Ip wrote a piece which we kind of agree with. He's saying, look, rates are just too high overall, which we do believe official rates are too high by at least 100. Why not just get going 50? New York Fed President, former New York Fed President Dudley this morning saying he would definitely vote for 50. I thought he wrote a very balanced article on Bloomberg, with really both sides, but very persuasive for 50. It's a coin toss here, my friend. I mean, it's like we haven't seen this in a while. We'll see if there's more signaling ahead of the meeting. I personally think, the end game is more important. Where is that neutral rate? And then how do we get there? If they're going to front load cuts, and we see that with an initial 50, and then we get a new summary of economic projections on Wednesday as well, we see that pathway. I'm looking at the former one. They went from 3 rate cuts down to 1. In June, they had 5.1 as the ending 2024 Fed funds rate, and then coming down 100 and 100. So we know that's going to change. How that's going to change, I think, will be important, not just for markets, but, for treasury yields and in particular yield curve shape.
Yeah, that is interesting. And let's talk about that because rightfully so, all the focus is on Wednesday. And this is, I feel like we say this all the time, but probably will be one of the more anticipated Fed meetings in quite some time. But take me through a path, take me down a journey of what you think the rest of the year looks like. So for this conversation, we'll assume a 50 BP cut, on Wednesday. What do you think the rest of the year looks like?
So assuming, just say they go 50
Yeah.
this week, I think they would certainly intimate cuts of 25 and 25. The next Fed meeting, which most people know, but if clients don't know, is the day after the election. But I think certainly if you look at market pricing in totality, we have 100 for 2024. And then you would have to go with the premise that they would continue. So they're not looking at this in isolation. I think they are trying to look at this rate cutting cycle holistically. Is it a mini recalibration here, a little calibration off some of the froth we had with the rate hiking cycle? Or do they want to front load here, go a little bit more aggressively and hedge some of the labor market downside that they potentially see? So if they go 50 this week, certainly doses of 25, I think from here would be logical. If they go 25, then I think they're signaling probably a pathway of 325 basis point cuts for 2024, and then we'll see more cuts into 2025. But those, the speed in which they move here, I think is more relevant to, the yield curve shape than anything else. Do they want to get it in now while they can?
Yeah, it's interesting because I think there's sort of a mixed messaging depending on which side. People think if they go 50, they're kind of maybe there is some concern about the economy. If they go 25, then there's the fear they might not be doing enough quickly enough. It really is a little bit of a dilemma, I think, on both sides of this thing, which I think to your point makes for some great debate. Let me maybe pivot here a little bit and let's talk about the markets relative to this. Pretty volatile markets in September, which is a very normal thing, right? That's pretty seasonal for the markets in general. But as our clients know, we've probably been as active in the DCM markets this month that we've been all year. It's been a very busy. We're seeing all sorts of types of deals. We're actually even seeing the ECM market pick up a little bit. How does one navigate in, these markets with such unknowns from the Fed?
So I think opportunistically, I know you and I have talked about that. And even coming out of Jackson Hole, I think there was an anticipation that Chair Powell once again set a great stage. He did it in late 2023. We saw a wave of issuance in early 2024, and then again here in September and into October. I think these are very friendly markets. I think it's really two things. I think from an investor perspective, I think what's going to be really important here is not only the Fed moving here and starting an interest rate cycle, how deep that cycle is and why they're actually lowering rates. Because when you look at the economy, and this is important too, you look at the Atlanta Fed GDP tracker, we're running 2.5% in real terms. So if you look at nominal terms, this economy is still growing at a fairly healthy clip. There is weakness on the employment side. So you can make an argument that, they're trying to hedge out some of that weakness. You could also make an argument that we're in a soft landing right now, and the Fed doesn't want to see us move one leg further. In conjunction with that, obviously, we also have the election too. They don't know no one knows what the policy outcomes are going to be. We don't even know what the election outcome is going to be. We don't know what the policy outcomes are going to be. So they have to act a little bit in the here and now, but I also think they have to be a little reflective of, we're running deficits in the range of 1.75 to 2 trillion a year. There's nothing coming out of the CBO that says that's going to change in 2025, 2026. So I'd like to see them be a little cognizant of that. But like I said, it's not going to stop them moving in the here and now because they have to address the issues that they see in terms of the economy. And this is a pretty dynamic economy coming out of the pandemic and even 4 years later.
Yeah, so let's expand a little bit on the some of the dynamics of the election, and maybe I'm taking it in a little bit different direction than most would think. From everything I've seen, read, watched in his pressers, I actually firmly believe that Chairman Powell is a very honorable man. That being said, if there is a change in president, he might not be able to get to finish this job. That he's been, I think, feeling very confident about, at least in the last few meetings. Can you just touch on, how that may or may not play into the thought process of 25 versus 50?
Well, yeah, I mean, that's a tough one. I have to believe, like you, that he will largely try and be objective here in terms of what the economy is presenting. And look, there will be speculation on both sides, regardless of whether he goes 25 or 50. If he goes 50, there could be criticism around the timing and the election. But I think if you look at this pocket of time and we look at it a little bit more holistically, you look at the pandemic, you look at some of the pandemic conditions, they've been supply side driven for the most part. There's criticism, I think, on a number of different fronts. But at the end of the day, whether it's housing and supply, whether it's labor and supply, it has taken a lot more to burn off these pandemic conditions than I think anyone thought, including myself and the Fed included in that bucket. So the extent that this now seems to be, coming to fruition, we're looking at the labor market weakening, all those types of things. I think he will move in the right vein in terms of where he sees the economy right now. And I think that's where we're at. My only hope is that in conjunction with the fiscal spending we've had, they kept rates very, very low in 2021. They kept the balance sheet moving. My only hope is going forward as they lower rates, they still take into consideration very clearly what we're seeing coming out of the fiscal side. But I don't question that, Chair Powell is going to do the right thing for the economy as he sees it right now.
Yeah, I agree with that. I like I said, I do think he's extremely honorable man in that way. Well, Greg, I can't thank you enough. You know how much I enjoy doing this, but I will tell you, just even thinking about our next preview here, in early November, leading into the election with the Fed meeting the day after the election, this is going to be quite fascinating. I will tell you that I was in the 25 camp for a very long time, and probably in the last 3 or 4 days, reading some of your notes and watching some of the other rhetoric coming from some of the, people that I feel telegraph on behalf of the Fed. 50, I believe, is where I would place my predictability bet on myself, which is a change in thought process. So thank you very much. Again, for our clients, we're busy, we're working hard. Greg is fully available. I highly recommend 15 minutes of your time. I think Greg gives really sound guidance here when it comes to the Fed and rates, et cetera. And, I know for a fact he'll be digging in on the presser, which I think is really where all the information comes out after the fact that matters for moving forward. So, Greg, thanks for your time this morning on a Monday. Again, I apologize for my voice, but looking forward to the next one, and wish everyone a good week ahead.